Alright, boys. Gonna begin in a sec. Interesting lead into this. Actually quite dangerous price action as we start this out. Yeah, man, this is a bit of pump up music for the big night. Let's see what's coming through. Haha. Yeah, it's going off, right? Alright, welcome traders. Yes, sir. For fuck's sake. Gonna have to get a bigger desk, move out of Chinatown. Listen, so the markets actually continue to rally into this, and of all the scenarios leading into the announcement, what you probably be looking at doing is this one is one of the most dangerous because the market's getting too net long. Yeah, so the smallest problem with some of the reporting, the smallest exit poll, which is suggesting it's going to be a close race, really is going to lead to dramatic pullbacks here. Not so much in the pound, but every other pair has started to front run as well. So the euro, the Aussie, all these are priced in now, basically, 90% that the market's going to be a stay. And since there's about 8 hours of blackout period here, where it's only the hedge funds which are going to have access to the latest exit polls, and because the actual country is fairly fractured in terms of who's voting for in and out, there could be some pretty dramatic swings coming through. I mean, if there is just a very easy win for the Remain party, then perhaps we don't get as much action as we had hoped for. The thing that people have to be a little bit wary of is that once we get to 150, 151, and profit taking begins, what do we do? What do we do as traders with the pound? Yeah, and I would suggest that you be in no hurry to buy on the dip on the first day. Yeah, I mean, that's just the way I'm going to be approaching it. I don't like the way the market's rallied into it. If you traded long enough, you know that buy the rumor, sell the fact is not just a saying, it's almost a reality. Yeah, and the market loves to reverse. Okay, now, considering that the people who are heavy short are probably heavy short lower than 145, the market can go down a significant distance from, say, 151, 152, before we get to some sort of solid support that, so you may find yourself, say it goes to 152, it pulls back to 150, you want to buy it. That's, I think, the sucker buy. I mean, you could definitely work out and it goes to 155 over the coming week. But I'm going to be very patient in when I buy. I've seen too many reversals happen when it's too easy a trade. Because that's what it is, right? They stay, so the pound's going up. That's what everyone says. All right, so the pound's going up. So, okay, well, if trading was that easy, we'd all be millionaires. We just buy, a multi-million-dollar position as soon as it becomes clear it's going to be a leave. Right? There will be some fairly heavy volatility, and it wouldn't surprise me at all if we sell off for a week, and then go up for like a month, just to sort of shake out those week longs. All right, so that's the way I'm playing it. How that transposes over to, say, the other risk currencies, though, I don't think they're able to manipulate, say, the stock market as much. All right, so the Aussie, I think, is going to be fairly safe in terms of pullback. So say we get to 76.50, I'll be looking to buy, say, 75.80. And as long as stock markets remain high, and as long as we get some sort of continuation in risk appetite, all right, so at least no dramatic falls in the stock market, which is harder to do than the pound, then you may see that the and the Kiwi and the CAD become the go-to currencies, outperforming even the pound next week, and outperforming definitely, say, the euro. There's that euro Aussie short. It's starting to look very dangerous there for the euro longs. In terms of what the euro is doing, it did have a nice little rally. Yeah, I mean, maybe we will break 114. We're talking about yesterday. How's the market going to react when we get to, the result and it comes out a stay? Will it break 114, or will the euro pound cap it by the selling, and will everything move through to dollar buying because of that capped in the euro? Move through the dollar buying. Dollar yen is being very hesitant. Yeah, I mean, look at that. That was at the start of Europe today. What was that? All right, that's like a 60-point move on nothing. Okay, so this is probably what you're going to see a lot of in the US session. It's just there is no liquidity, so big order, just bang. Yeah, snap down. It was actually probably over on the pound yen that you saw that snap. So it's probably a large order liquidating, and that just transposed over to everything else. There was no news there, so that was just obviously flow. So the market can't handle a big mover at the moment. DAX is pushing into pretty strong levels. I mean, DAX is still 20% off all-time highs, so it's not like DAX has got a lot of room to move. But it is the S&P which has got that little bit less room, and it's going to be more dramatic if that breaks, because sort of like the whole market follows S&P. S&P breaks fresh highs, and everything can get that green light to rally, especially on some of the underperforming stock markets around the world, like ASX. Something that if you're Aussie, you might trade a little bit of. Now, the two trades we talked about last night to get involved in was Euro Swiss. It's starting to develop nicely. Euro yen was a little bit more speculative, and a euro pound short. I'm looking at the euro pound short probably to do Friday. Euro yen should be decent today. This one's going to win if euro breaks 114 or if dollar yen breaks 105, and one of those two has to happen almost. It's just the way the market is on a stay vote. In terms of what the pound can do, in terms of where I want to buy pound yen, that's something you guys all traded a fair bit. I don't know, man. Say it gets up to 158 on the news. Maybe 200, 300 point pullback down to 156. But like I said, I mean, if I'm in no hurry to buy the pound, I can't be in a hurry to buy the pound yen. But if dollar yen's above 105, instead of looking to buy the pound, I'm going to be looking to buy the pound yen, if that makes sense, guys. Dollar yen back above 105 is going to be very important for what pair we pick to express our risk on. Some pretty strong action here. It'd be great to see dollar yen back above 105, and then makes it so much easier to trade all the pairs. Instead of Aussie, you trade Aussie yen. Instead of euro, you trade euro yen. And just going forward, there's so much room left in a few of these pairs, like the Aussie yen, that whereas the dollar strength may be capped, that some sort of US dollar thing can come out that will help. That will help the dollar yen rally. So it might smack the Aussie around and the euro around, but the actual yen crosses should do well. So that's recapping basically what we talked about last night. Yeah, but I really wish the market would stop rallying. It'd be more pleasant if we see, say, a 100-point settling, or down to even. I mean, look, it's getting crowded. Yeah, it's getting crowded short term. And really, I mean, the polls have not suggested that this is a done deal. So this is scary. All right, this is scary. I've had a bit more read about when we're actually getting all the information out. It turns out maybe there won't be enough information to be trading in the US session tonight aggressively, even from the hedge funds. But definitely by the end of the US session, there should start to be some sharp moves. And that's the inside information that we'll be talking about. All right, so it could actually lead to that pop of the S&P above those fresh all-time highs. But the start of the European session, which is what we were talking about earlier, is so it started the US session where we thought we might start to see some movement, aggressive movement. Probably have to delay that 3 or 4 hours. The polls end just after the US session finishes, and so if you're Aussie time, we'll just go through what that exactly means. All right, so this is in Sydney time. The finale or the result's going to be done around about 12 to 2. There'll be enough in to see the market come through, the actual for pollsters to pull the market. 10 p.m. like we said is the closing. $9 a.m. Sydney time, so 12 midnight your time, Potter. These are the official results. What we're talking about, the market moving on before, is the exit polls privately commissioned by the hedge funds. There seems to also not be talking here about a public exit poll done by YouGov as well. That should be coming out at 10. Yeah, so 12:30 is the first real result. Sunderland and Newcastle. And they suggest that from this result here, you could be able to start to extrapolate a larger trend. They suggest that all the big cities are leading towards the Remain camp. Alright, but by 4 a.m. you got the 100, by 5 a.m. Basically they'll be able to call it. So this is mid my day tomorrow. Yeah, but expect the market to have finished moving by then. It's not like you get the final result and the market's at 151 and it's going to go to 152 on that final result. If it's already priced in, yeah, that's when we start to see the whipping. The real action is going to begin probably the European session tomorrow. That's when we're looking to buy the dips, right, on the stay vote. We have to be patient and try to get the nicest level. Watching dollar yen, seeing if it's above 105. Watching the stocks, seeing if they're broken out fresh all-time highs in the US. And that would depend on how aggressive we can get. It'd be good to see oil back above 50 as well. Oil got snapped a little last night. And if anything's going to undo it, it's going to be oil. Yeah, so this term here is what you're starting to hear a lot in reports as well, asymmetric risk. And that's that the top side's limited and the downside's, extremely open here. And it was true, even before we had all the Brexit talk, there was talk about the fundamental outlook for the UK, and this leads to why we may have a reversal over the next week. The fundamental outlook in terms of its current account deficit is pretty bad for currency. Yeah, so the relief rally could just be that, the relief rally. The sustained rally may be something which is a lot harder to predict and to account for. The data out of the UK hasn't been stellar. Yeah, this is talking about nothing new, but what I was talking about here. We can look at Aussie Kiwi in a sec, Jenny. It's one of my trades too long. We have to get back above 105 pretty cleanly. Oh look, I think the majority think it's going to rally pretty strong for the rest of the year. But I'm just talking about the other side, right? Why it can go down. And if they play games and the price action becomes negative, right? All these longs that are caught, because so many guys are going to be buying the pound after they stay. It's just going to be way too easy, like I said, and they're just going to come after the stops probably, right? And it's the type of situation where it's like the clients will be ringing me up saying, "Why is it going down? Where can I put my stop?" I'm like, well, there's no reason we can't go, all the way down, right? Back to 140. That'll take out some people. That's that would require a fair bit of good US data, surprisingly strong NFP, something along those lines. Once this Brexit is out of the way, the chances of bringing forward the timeline for the US Fed hike as well from December, where it currently is, will all be dependent upon how inflation begins to develop around the world, if it does, and also US jobs data. So last month was incredibly weak, right? And it's actually been falling for the last 4 months. So it's trending lower. But if we have a shock spike back up in a sentiment or B jobs numbers randomly, right, in either next month or this month this next month coming non-farms or the month after, then you can have that NFP, so the FOMC rate hike brought forward. It's not so much that they're actually going to hike the rates earlier. It's just that there's a chance they will, and they'll talk about it, and that will alone feed the frenzy and feed the yields starting to rally in the short-term yields on the US bonds, and that leads to currency gains. And once you have currency gains starting to begin, you can start a trend, if that makes sense. So it is possible for the US dollar to rally after the Brexit. It's not the default case. I'm just giving you both sides of the story. Sometimes I think I come across too US dollar bearish, which is my default case, right? I think they secretly want to have a weak US dollar. These guys are actually talking about buying euro pound. That's crazy stuff. That's crazy stuff. Actually, if you're walking at CNBC earlier today, you saw a little bit of a leak come out of China that they're considering more stimulus. Now that could be big news for the Aussie. I'm going to see if I can get some more information upon that. But that sort of story, if it gains traction. Oh god, I've had myself on all over your update. Sorry about that, guys. I wasn't looking at. Need more screens, Will. Need more screens. Alright, so let's have a look at Goldman Sachs top techs for today. They're talking about buying and where the targets are for the Euro stock. This one I'm much more interested in. Yeah, I can see this happening. I can see this happening, easily happening. Alright, targeting 11,200. Yeah, AJ, I mean, hedge Bitcoin's talking about it all being risk on. Yeah, it is going to be all risk on, right? But that doesn't mean that they won't have those little reversals just to give you better entries. I mean, obviously it's, well, I don't know. It depends how you trade, right? Some people like to let trades run and not try to adjust them. In terms of, say we're going up 1,000 points, if you're in and out, you might be able to get 2,000 points from that trade. But every time you close on a decent rally, maybe the market overshoots and you don't get a retracement that you're happy with. So I can understand that some people don't like it. I haven't looked at this for a while. So this is the S&P DAX ratio. It's basically which one's underperforming, which one's outperforming. You know, the DAX was on a frenzy back when they announced the ECB QE. So it was all the way up to 12,000, and it's only at 10,000 at the moment. Okay, so in real terms, it has that big amount of catch up. But the same as the Aussie. I mean, the ASX was at 7,000 before the GFC. We're still not back there. We're just at 5,400. So it's, and you know, and look at Nikkei, right? Nikkei is nowhere near its highs, and that's 20 years on. So it's not clear that, you know, what's going on there. But you know, I do like the story about the way the ECB is going to continue stimulus over in the Eurozone, so it should outperform. I mean, the ECB is actually buying the bonds of companies, yeah, so of big companies, which is quite ridiculous, yeah. All right, so Goldman on gold. I wonder what shenanigans the market's going to get up to today, because that is starting to be a bit silly. I mean, if it's at 150 before the final result, I mean before like the US session, it might even be worth a tactical little sell up there. Probably not my style, but I might get Potter to do it. Potter would do it for me. Let's see how it's playing through on the... Oh, okay. That's interesting, boys. That's interesting. If you're a bull, that's not what you want to see. Alright, this is Euro pound. It's still got 200 points to move, right? And if the pound buying is going to smash the euro so hard that it can't maintain even its strength, then that scenario I was talking about, right, where you have the euro capped but dollar yen punched through 105, it would be great if one of these currencies actually got their shit together. Alright, so these having a little war between dollar yen and euro. Pound's obviously the victor, but this euro pound selling I think is going to be critical here. I hope I made that clear what's going on there in that dynamic. The euro pound selling, capping the euro. So where does the strength of the US dollar go to then? It goes to the dollar yen, because you can't have stocks going up 300 points without euro yen rallying, and pound yen will just get double, tripled on that. Right, so that's always when I look at the euro. After I look at the euro, then I'll go see what the dollar yen's doing in relation to how we're going to play it tonight. The way it's actually unfolded just on that little spike suggests that the euro is going to be capped and that the dollar yen will punch through. I think that makes more sense anyway. which makes the Euro Swiss a little less attractive, but we're too late. We're in that now. All right, so that's pretty interesting. The pound's up and away. I think everyone's scared to sell it here, as well. It's not like you're going to have anything but profit takers. But I thought the profit taking would be more aggressive today, and especially at the start of the session. So this is actually making trading more difficult. Not that it's ever easy, but this is more difficult. I can't think there's any exit polls yet, Potter. How long have you guys been opening polls for? A couple hours? I mean, you had a very, very early exit poll stuff here. Anyway, so gold, is it going to stop at 1250 or not? That's going to be an interesting question. Will the weakness from the US dollar catch it? Will momentum push it through? I mean, if it breaks 1200, that's pretty bearish, yeah. So it's definitely not one I'm gonna look to buy at all. But obviously, if there's another weak NFP and Fed is on a full delay, then gold should do okay, even if stocks are doing okay. Oh, this is a long-term view of gold. They're quite bullish. We'll skip over the bond stuff because that's a little hard to understand if you never read it. If anyone's got a Betfair account, can they please let me know what the Remain odds are? They're talking about it in now. There's big move on the Remain camp. Because the bet market's actually been a heavy factor in pound movement lately, rightly or wrongly. I mean, the betting market on the polls is the largest in history. Actually, it's 150 million. They say it's been held on this referendum, but that's nothing compared to the size of these invested people, right? So if they can make a big bet and that moves the market. You could easily make more off the Forex gains just by manipulating that betting market. 8-1 on. 8-1 on. Yeah, it's I don't know. I'm naturally a contrarian. Maybe I want to see the world burn. It'd be much more fun, right, for everyone if the results are close. They're probably trying to manipulate you so you don't go and vote, Potter. You're going to vote for leave, won't you? It's not even worth it, mate. Don't even get out of bed. So it's going to be interesting to see if that is, this sort of strength, early strength, that we caught on by the trend followers and the people afraid of missing out. Don't buy the pound just here, guys. Really. I mean, look, I can't stop you. Might work out, but I think we're going to see shenanigans in the next few hours. Huge rallies. Yeah, we might have a little something different though and look at the Aussie yen. Sorry, Aussie Kiwi. So Aussie Kiwi is something that, if you've been following me in the chat room for a while, you know that I'd like to trade. Last year we had some tremendous levels to get involved in. And the market stalled, and then we had that huge rally. This time it looks like we're going down again. Well, we have broken the previous support, which is 105 is not just a support for this year, it's a support for multi-decade support. Alright, so it's a type of support that gets respected no matter what. It's like 100 on dollar yen. We get break back above it, somehow get the Aussie outperforming. If you're looking where the Aussie's next resistance point is, it's so much higher than the Kiwi. I mean, the Kiwis right now, you know, it's broken all its previous highs, so every time it moves, it's a new high. Whereas there's that natural 200-point gain just for the Aussie to get back on fair footing. I mean, Kiwi is notoriously out of control in terms of limiting itself, how far it will move on in certain moves. But I do see this as either A, everything's going to be okay and everything's going to rally against the US dollar. So in that scenario, Aussie's going to outperform the Kiwi just on catch-up terms. Or B, everything's not going to be okay and then the Kiwi has further to fall. Okay. The scenario where we go lower and lower and lower is where the RBNZ fails to come out and to cap the Kiwi with either verbal jaw burning or threatening to cut the rates again, because they've gone very neutral. And the RBA actually does cut. Yeah, and or a Chinese story that develops maybe in the second half. In that scenario, we can break parity. That would be the first time since these currencies have floated. So the first time in the last 30 years that that's happened. But generally it stays between 105 and 130. If you could go back further in time, it's always between 105 and 130. So for us locals, this is crazy stuff, right? A lot of my Kiwi clients are on long Aussie Kiwi. And the battle's been pretty real here. This is, you know, you can view this as a good basing, yeah? If we crack back up, you'd be right to, I think, start to get more aggressive. Like, I'm just dabbling at these levels. You know, but I'd actually buy more as the market went higher, if that makes sense. Because you got confirmation of a trend reversal. You don't really want to be buying against a trend aggressively. I mean, as it is, I'll probably get enough trouble if the market goes towards parity. So I just know myself. So I'm trying to buy small. But if we break above 105, hold above 105, start moving towards 106, then on pullbacks, start getting more aggressive. Well, that's an interesting move, isn't it? Must be pound getting smashed here. Yeah, so look guys, if you're using 50-point stops, don't trade today. Because that was 50 points on nothing. But yeah, I was saying don't buy up there. That's yeah, it won't surprise me if we fall further. I'm not selling, but I'm just saying. That's a target we drew last night. We'll be selling any sort of bounces. In terms of when the market whips on the pound, we're looking to get involved in the short euro pound. I didn't make that clear in my first market update in the first 10-15 minutes of this little rant. But euro pound's a safer way, safest way probably. But just be careful if they do leave at 85. So in this particular pair, which is an expensive pair in terms of cost per pip, and if you're in US dollars, it's not $10 a pip like you trade in the euro or the pound. For Aussie traders, it's $2 a pip, $20 a pip in a full lot. Alright, so what we might do today, different to the other streams, is we might have a little pause. Yeah, and we'll come back and we'll check the price action every couple hours. I'll let you know in the chat room when we're going to do it. But what would be really interesting here is to see the US Open. So that's at around about 11:30. Alright, and to also just come back in say a couple hours from here. And look at the pounds, reaction so far. All right, go get some voting gun, Potter. So we'll be back in. Let's make it 1 hour 20.